The desire to become a millionaire overnight is the root cause of failures in the stock market. End of quote. And that goes to any endeavor in life. What's up, you guys? Alex here from Bulls and Bears, or Focus Alex from YouTube. Real quick, if you're new to my channel, my name is Alex, and I'm a 19-year-old trader attempting to master the stock market, and hopefully now the forex market pretty soon. So if you're new to trading, or maybe you're already trading these markets, you're definitely in the right place, as everything that I show here is not only realistic but truthful and honest, as you will see all my losers and all my winners, like I typically show on my spreadsheet for transparency. So with that being said, let's digest what I just said right there. Obviously, everyone wants to make money in the stock market. Everyone's goal is to make money in the stock market, and the goal of the stock market itself is to take money from you. So that could be a big problem and hard to manage. So I'm gonna give you guys 3 tips. One of them is a formula actually that'll help you guys out in your trading journey and your career. So number 1, very simple, very basic, and that is to draw lines. So right here, I have a position right here, 1 share, and I have a red line right here, which is going to be the point where I plan to take my loss no matter what. And over here is my profit. So let's say, for example, I took this trade yesterday, for example, and today I come back at the screen and I completely forget about where I'm going to take my loss or my profit. These red lines, or these lines, this red line in particular, since we're getting close to it already, is going to be the point where I take my loss. So it's going to kind of psychologically tell you, okay, well, this is the point where you should be taking your loss, and it's going to give you less hesitation pretty much to accept the loss. And same goes for the profit. So that's number 1 right there. Very basic, very simple, nothing too major. Number 2 is this little formula right here: entry minus stop divided by your risk equals your shares. I find that initially myself as well, I had no idea how much shares I had to go in with, and therefore that kind of distorted my risk to reward. I probably didn't even have any risk to reward ratio in the beginning, but your entry, which in my case is 3085, minus your stop, which is, I get it technically, I look for it technically before anything, and in this case it's right here, which is the point where I think the market is not going to continue to move higher. So that's where I'm going to take my loss. So my stop loss is 2.78, and I divided that by the amount of risk that I'm willing to take. And that is where, like for example, we're pretty much already right there. So I'm going to just take my loss right here. So good thing it was just one contract. One. All right, let's take my loss right here. No biggie. Alright, so there we just took my loss right there, no hesitation whatsoever. That's the way that it should be. So of course 30 cents is no problem for me. 30 cents is probably no problem for you either. And that's where I want to go into the next topic right now. Be comfortable with how much money you're willing to risk. And to emphasize that, I want to show you guys, well, first of all, make sure you catch this right here. Divided by the amount of money you're willing to risk equals your share size. Alright, so to emphasize the point I want to make on the importance of understanding your risk and being comfortable with your risk, I'm going to go back in time right around a month ago to when I initially started uploading videos on YouTube. And the very first week of my trading, I was risking right around $25 to make $50. And to be honest with you guys, as you can see my profit and loss right here, things were looking pretty good. Nothing was out of order. Headed into my second week, things were also looking pretty good. My targets were being met, and they were really good, like I planned them to be. And as you can see, this big streak of losers right here, they were all under control. Everything was below 50 in most cases, except for this one, which I rated it on number 1. So that's why it's important to have a spreadsheet. I'm going to go into that right now. But this week was pretty good as well. The third week was also decent, except for this loser right here. And that's why it's important to that's why it's key to understand or to manage yourself properly and not allow these big losers right here. And I also gave it a number 1 or therefore rating. And yeah, closing in this third week, massive streak of losers right here, but fortunately enough, I had a good control that I managed to keep them under $25, except for these 2 right here, but they still weren't big at all. And it wasn't until this day right here, this result right here, 2,467 was a turning point in my life and of my trading career. And it may look like it turned for the good, but unfortunately it was a bad turn for my trading because of the psychological implications that it had on me. After this big win right here, I was thinking a little bit, and I thought that I was ready to increase my position size and increase my risk, in other words. And if you go back to my videos, I actually don't even recommend you watch the video, but you could just look at the title and the thumbnail, and it pretty much just says risking big to make big money on the stock market. And I don't recommend you watching because, well, I was just encouraging risking a lot of money, which is not a good thing when you're starting off, of course. But after this day right here, as you can see, my profits were insanely big, but something else that was big were my losers right here. And this just comes to show that I really didn't even have a target to meet or a criteria to meet. Like initially I was trying to make $50, I understood that. But in this case I was making 300, then in some cases 1,000, 84, 83, 900, 200, 100, completely out of order. And then as of my stop losses, I was risking 150 on this one, 64, 460. So you can see very clearly that I really didn't even have a plan for any of this. And that just boils down to one thing only: not understanding how much money you're willing to risk, and not understanding it emotionally, which is equally as important as understanding it just formally. And this is actually a good example right here, the earlier trade that I took, because, well, let's say the price was still right here in the middle and I was still in my position right here. Let's say I was risking 250, and it was my first time that I was risking this amount of money, which is a big change. And let's say the price came down right here, and if I didn't understand it emotionally that I was ready to risk $250, what do you think would have happened? Well, the obvious answer is that you kind of don't even want to accept that loss. So you kind of are getting a state of mind that you're just holding and hoping that the stock is going to move up and you'll take a profit or break even. But what unfortunately ends up happening is that when you reject your loss and you just hold it and hope for the best, the price typically just continues to come down, and, well, you're at an even bigger hole than you initially were in. So that just leads to bigger losses. So that's the very key thing to understand right there, is understanding how much money you're willing to risk and how much money you're comfortable taking on your trade. And initially, like I said, I was risking $25, which I was taking losses back to back with no hesitation whatsoever. I was 100% comfortable with that. That's the thing right there. When it came to the end, I was not comfortable losing this amount of money, and I would constantly catch myself thinking like, oh wait, maybe it's gonna come back up. But that is just not the right thing to be doing, you guys. And that's the key take point from this right here. Understand your risk and be comfortable with it. And in my case, apparently 6 months is not enough, because I was risking $25 to make 50 for like 6 months, and I decided to increase that. But unfortunately, 6 months is not enough. Maybe you should try more months or even years, actually. But let's speak about the spreadsheet now and why it's important. And in a very broad way, the important thing about this is that it keeps you accountable, and it makes you responsible for your losses. So let's focus on one column right here, which is the risk to reward / P&L. So, and if we look at the short position that I took on the euro with the Swiss franc, I was risking $50 to make $100. So I was risking 1 to make 2, and it's $50 to make $100. So eventually, whenever I close that position, I'm going to have to put a number right here, and that number is going to be my loss or my profit. So let's say, for example, I took a $50 loss, and I look back to it, and, well, that's what I plan to do. I plan to lose $50, so everything's fine. But let's say there's a day that comes that you lose 200 and yeah, just 200. You're going to look back to your initial plan, and if you see that they're not connected, or they're not what you initially planned them to be, you're going to realize that there's something wrong. And obviously it's not something wrong with the market, because the market is neutral. It's going to be something wrong with you. And that's what you're going to have to think about it, and meditate on it, and think to yourself, well, what am I doing wrong? And obviously it's just not accepting the loss. So if that's the case, you probably have to decrease your risk and do better. That's why I also implemented this thing right here on the side, which is pretty much a rating for my trade. So initially the rating that I did on these 3 trades was a 10-10 and then the 7 right here. But this is the after, and I probably should have fixed that, but this should say after, and then over here it should be before. And well, yeah, this is the before and after. So after, in the case that I lose $200, I will give it a number 1 right here. So this is also going to reinforce your risk management and tell you that you're doing bad, which in this case, if I would have taken the $200 loss, that's not what I initially planned for, so I don't give it a 1. And it'll just make you rethink things and understand where you're at in the stock market or in the forex market, any market. So that is it, you guys. Those are the key takeaways. Understand your risk, quick little formula, and a quick little strategy that I use. And I should say that there are many platforms that automatically put this right here, and they'll let you put a stop loss. That's actually why I'm going to forex, because it automatically, not automatically, but it really puts these in place for you. But if you don't have that ability or tool, you should definitely just put down the line right here, and it'll help you kind of how do you say it? It'll give you less hesitation to take the loss. So those are the 3. And also I forgot the formula right here. Really important to understand how much shares you should be going into. So with that being said, you guys, I hope you guys enjoyed, and I hope you guys are staying safe out there, risking a little bit, something that you're comfortable with. And that is it, you guys. Hope you guys got something out of this video. Hope you guys enjoyed. Hope you guys are having a good day. Leave a like or a comment and subscribe. Stay focused, you guys. See you guys in the next one.